What's good, everybody? It's Jonah. Come back at you on another video. So this video I'm going to do the trade recap for Friday, July 17th. And this day I'm excited to do the recap for because this day resulted in a mega win. And so I need you guys to stay for the entirety of the video because you are going to learn a lot of information. I'm going to share with you guys the gems that allowed me to catch this move, right? Because this move that I'm going to show you, it literally continues to repeat in this marketplace. And so if you decide to show up each and every day, and to learn, right, then it is inevitable that you will become a profitable, consistently profitable trader, right? So jumping right in, because we have the S&P and the NAS, but before we do any sort of trading, we go in and look at the Forex Factory calendar. So here I just had the red folder and the gray folders, which are high impact news, and gray folder are typically holidays, right? So for Friday, July 17th, we don't have any news, right? So there's nothing for us to be particularly wary about, right? So this is in fact a trading day that I'm behind the charts for, right? So now, first thing we do, we go into the 1 hour time frame to determine the higher time frame bias. In simple terms, it's basically the direction that we expect price to most likely head in, either up or down, right? It's just that simple. We use the market structure to determine where price is most likely to go. And whichever direction it is, whether bullish, bearish, right, either up or down, that is the direction that we stick with for the session, and that is the direction we trade towards for the session, right? So with the previous day session, it was previously bearish, right? Because we were looking to take sales on Thursday, and basically Thursday provided sell setups, right? As you can see, price went up here and then aggressively pushed down. The same idea with NAS, right? It gave us a setup and then aggressively moved down. So we were bearish the previous day, and all the price action is showing signs of bearishness, right? As you can see, a low was formed here, and then eventually a low was formed here, and then eventually the final low was here, right? So this is the lowest point, and prior to this low, this was the last swing high that was formed. Now, if you can clearly see, right, this swing high was not traded to, right? Obviously, these candles did not clear this high. So on first glance, right, we're bearish with the S&P. However, one fine detail that people didn't pay attention to was with the NAS 100, right? So if we look at the NAS, right, you're seeing, of course, price was aggressively moving down after this day, right? You're seeing a low get formed here, and then ultimately, another low here, and then ultimately the low down here, right? So this is the lowest point. Now, prior to this low, right, the previous swing high prior to this low was right here. Now, I know it might be hard to see, but that's why sometimes you have to, zoom in, right? And you'll see that this candle's high, this candle's high right here is in fact higher than this candle. And I'll just draw a line so that you guys can see, right? So you see this candle high, this candle here clears this candle right here. So this is technically, if I mark it for you guys, right? This candle right here is technically the swing high prior to this lowest move down here. Now this swing high, right, that we just marked, right? This swing high does in fact get traded by this candle right here, right? As you can see, right, this high takes out this high. And this is what I tell people all the time. Like when it comes to market structure shifts, price doesn't have to close above it. As long as it trades through it, this counts in my eyes as a market structure shift. And if you were ever had doubts of, I mean, you can see it, but if you were to ever have doubts whether the shift happened, right, then if you look at the very top, and I'll kind of circle it for you guys up here, right, those are the open, high, low, close values for each candle. And this, if I hover my cursor over this candle, you'll see the high, right, looking at this value right here, right, where it says H. The high of this candle is 668.2, right, the last few digits, 668.2, and this candle right here is 667. So clear as day, this candle based on the value is higher than that candle's, right? So that told me that NAS 100 made a market structure shift bullish, even though we were bearish on the S&P, because this was the most recent market structure shift prior to 8:30. I now entered this trading session on Friday bearish on both pairs because the S&P and the NAS tend to move in tandem, right? And because Nas showed a willingness to break structure and go bullish, I'm anticipating the same is going to happen with the S&P. So that's why I approach Friday being bullish, and you're going to see how that benefits us, right? So now we're going to fast forward a few 15-minute candles. So now we're going to find the 8:30 candle, right? Which is this candle right here, closed at 8:30. Now, if we look to the left, what is the most recent swing low, right? To the left of to the left of 8:30, right? Because we're anticipating to go higher, right? So the most recent swing low in 15 minutes will be this low down here, right? So I'll mark it red, right? Because it's sell side liquidity. Same idea here, right? With this candle, this is the 8:15 to 8:30 candle. So at this point, we're marking the most recent swing low prior to 8:30, which would be this low all the way down here, right? 8:30. From this point, we look to the left, and then right, it's down here, right? So we now have our, sell side liquidity marked. Why? Because we're bullish, so we want to see price go down here first, clear this, and then basically shoot up. The same idea here, right? We're expecting price to go down, clear this low, and then shoot up to get rid of our upside targets. So now we have these levels marked. Now, what are some other logical levels that we can have as targets looking up, right? So we have targets right here. Now, why is this obvious? Because if we look at it closely, right, are these not equal highs, right? This, if we go on the 5-minute time frame, right, these are clear as day equal highs. So this is a legitimate target for us to reach for, right? Because at this point, I'm marking my upside target because I'm bullish, right? So I'm marking my targets to go higher. That's an obvious target right there. But this level is really close to this level. So if you wanted to, you don't have to have both of those as a target. You can just use this as an actual target because they're so close, right? Like look how close these highs are. This high is close to this high and it's also close to this high. So you can just mark the greatest, the highest high, right? And have that be the main target. So the way I'm looking at it now, because price is here during the New York session, right? And at least right now, this candle is the New York high. Then right now, as it stands, I'm looking at this as my main target. So at the very least, right, if price continues going like this until 9:30, right? Let's just say this line here is 9:30 open, then this would be the target where I'll take out at least 80% of my position because this is not only the high of London, it's also pretty much the high of New York. So that's where I would close most of my position at the very least. However, I'm just looking for other obvious targets. So now this vertical line where like right here, this is pretty much where the day started, right? Market open. So any other obvious targets to the left would be this high up here, right? Because this high was right before midnight. And you can see it's an obvious high that's like a standalone high. And then you're also seeing so many different fair value gaps, right? You're seeing gap here, gap here, gap here, right? So this is what I normally do. I normally, you could, you can put on the 15-minute as well, right? So this is what I do when I have my bias. I begin marking out very logical and achievable targets, right? You're also seeing another fair value gap right here. So it's another potential target that you can take higher, right? So this is what you're seeing here. Now, if we look at the NAS, right? The same idea with the NAS, what do you see? Isn't this equal highs, right? These are pretty much equal highs. So this is an obvious target, right? Like to me, it's like it screams at me that this is, you know, where the market ideally would want to go if it's bullish, right? Like there's a lot of liquidity at this level. And once again, these are the London highs. So like that is low hanging fruit. And the same idea here, right? Where my vertical line is for my cursor, that is market open. So what do you see right at market open? You see a big fair value gap right above these highs, and then you also see another obvious high, right? So when it comes to trading, it's like you want to formulate your ideas, your hypothesis, I guess, if you will, on like where do you expect price to go, but then you also look for legitimate targets. So if I were to take price higher, you're seeing all these obvious targets that you can take partials in along the way, right? Another example right here, right? Another clear fair value gap, right? So these are all potential targets that you can reach for if price gives us an entry, right? So this is already what I'm looking at for both of these pairs, right? To have a setup. So now if we go into the 1 minute time frame for both pairs, right? Now, the focus is just watching price because right now price is at 845. Now we get to see what happens, right? So price, continues going, going, going. We reach 907, play it out a little bit more. So now at this point, we see that price for the S&P came down and cleared sell side liquidity. Now remember, it's not 9:30 yet. So even though this move happened, we don't do anything until after 9:30, right? What I want to see, because now this move here made the low of the session, what I want to see is I want to see after 9:30 open, I want to see another push lower. I want to see after 9:30, I want to see price make its way down under this point here and make the low of the session. So then if it gives us an entry, we can take price all the way up. So even though I'm seeing this, I'm not going to, like, I don't push any buttons before 9:30. It doesn't happen. So seeing the liquidity grab, like, you expect that because after 8:30, that's usually when you see price start going after liquidity. So this doesn't surprise me. I'm just now waiting for price to give me what I'm looking for. So as you can see, price eventually came down and made another push. However, it's still not 9:30 yet, right? Because this candle here, this bullish candle, it's 9:20 to 9:29. So we're at 9:29 right now, not even 9:30. Then this, oh, sorry, this candle right here is 9:29 to 9:30, right? So this next candle is going to be the 9:30 open. So we'll see what happens. Boom. So as you can see, it might be hard to tell, but you can see at 9:30 open, this wick right here did in fact make the low of the session, right? This is the 9:30 open, this bullish candle. So for me, that now fit my confirmation because 9:30 made the low. So now I'm at this point, right? I'm all of my attention on the S&P. Why? Because the Nas still has not arrived at our point of interest, which is the sell side liquidity. It has not reached this level yet. So there's not anything for me to do, right? If price wants to continue sideways, it's going to continue sideways. If price wants to eventually go down, then cool, but there's nothing for me to do or look at until price makes it down to this level, right? Which the S&P was able to do because it's 9:30 open, this low did make the low of the session. So now I'm looking at S&P because I'm waiting to see if it's going to give me a setup, right? Now, as you can see, the Nas pushed up, it left the fair value gap, but once again, still hasn't reached this level, so I'm not giving it any sort of attention. I'm not paying attention to it. S&P is pushing up now, but there's no fair value gap, right? So that means there's no opportunity for us to enter. So now we just sit here and watch price. Price came down again, made the new low of the session in case this wasn't, good enough for you right now. It made another aggressive push. S&P, I mean, the Nas is now making its way down, but nothing just yet. So now we'll just keep watching price. All right, now with the Nas cleared the sell side liquidity, right? So now it has piqued my interest. So now I'm basically looking at both of these pairs, right? Because if you look at this high for Nas, this high that got formed right here, right, you can see this is pretty much like almost equal highs, right? So this is just created, I guess if you will, another liquidity pool, right? So is another sign, another liquidity pool that got formed that could potentially be another target to the upside, right? So you're seeing how this is all forming out in real time, right? So now I'm just watching price to see if any of the pairs are going to give us any bullish momentum and leave a fair value gap, right? So now Nas is just pushing deeper, and the same with S&P. So remember, we're bullish, so we're expecting to buy, we're expecting to go higher. So when we see this bearish move down, we're not looking at this thinking, oh, price is going bearish. We're looking at it thinking that price is purging liquidity and activating orders so that it can go higher, right? So I'm looking at this still thinking bullish, right? So right now, as we speak, you're seeing at least a potential opening right here, right? But we're not going to entertain it until we get confirmation that it in fact becomes a fair value gap. Boom, right? So this is the first instance right here of us receiving a fair value gap, right? Because all of these candles, the wicks close the bodies. But now this is the first sign of a fair value gap. So at this point, right, because if we look at the Nas, right, there's still nothing. So to me, because there's an opportunity that's presenting itself right there, I now decided to, you know, get a long ready, right? Stop loss at the low, I go long, and then my final take profit is going to be all the way up here for a final target of a 1 to 5, almost a 1 to 5.5. Now, what you need to remember, guys, is we take partial on the way. We don't just take this all the way up full price because like there's no guarantee that price actually wants to go up there. Price may just, you know, want to hit this gap and then reverse, or it might want to clear this high, this main high, and then reverse, right? However, at this point, I got my trade ready and I have my limit order, my buy limit. So if price decides to tap us in, then we'll be good to go. So then what happens the next candle? Boom, right? So at this point at 9:42, we are now officially in a trade. So then at that point we are managing the trade, right? So now I will just full screen. So all your attention is on the S&P, right? Because now we are actively in the trade. Stop loss at the low, entry at the fair value gap. So then, right, as I'm looking at price, now I'm thinking, okay, where can I take my potential first partial? So now I'm basically looking at the risk rewards and I see that, you know, the low hanging fruit would be a high like this. Why? Because this high is very easy for price to reach, right? It's only a small move up. And if I look at the risk reward, right, the risk reward for this high is a 1.22. So usually my first partial, I would say is about like 20%. So at this point, for a 1 to 22, I would basically close out 20% of my, excuse me, my position. And what that does is that it, you know, makes me more comfortable leaving my stop loss open and not rolling my stop loss early. Because I took off some partials, then I made some profit for the day and I have less risk open. So it is almost, it works in your favor, for both things. Then I'm also seeing other potential areas of interest, right? We look other areas, right? Like you're seeing you could have a fair value gap over here, right? So this is another area to take partial. So basically, as price is going through, I'm just marking up more and more areas to take partial, right? Because as price goes up, there's no guarantee that it's going to go until all the way up to your final target. That's like all the way up here, right? No guarantee. So I'm basically using this to measure out the risk reward and then taking partial. So here I'll take 20%. Then here I might take another 10 to 20%. Then here I might have half of my total position closed. And then here another 10%. And then at this level, 80 to 90%, probably 90% of my position because this is a massive um, liquidity pool, right? Because that's the London highs and almost the session highs and everything, right? So to me, I would have like 90% of my position closed, and 90% of your position closed at a 3.78 risk reward is absolutely phenomenal. Then I'll take another partial here before finally going up here, right? So you're now seeing the logic with price. So now we'll just watch price play out and then we'll go candle by candle, right? So you're seeing a little bit of drawdown and then boom, right? You see this one candle explode in our favor. And then if I, go candle by candle, boom, another aggressive candle, right? Boom, right here. So then at this point, literally what from 42 to 48, so literally 6 minutes in, you've now taken your first partial, so you've now made some profit for the day and you leave your stop loss where it's at. So then if we keep playing it out, right, you're seeing bullishness, right? That candle got closed but it didn't touch the fair value gap. This next candle, so then you take another partial, right? Obviously right there, close off another piece. Now we're waiting for price to get to this level, another bullish candle, boom, right? So now at this point, right, I would have closed at least 50% of my position. And, even if my stop loss stays where it's at down here, it's still okay because I closed off 50% of my position. And this is about a 1 to 2.3 risk to reward. So even if price reverses against us and we, lose the rest of the 50% of the position, we'll still walk away in profit. And the reason why our stop loss is still open is because price has a tendency to return to this fair value gap and we don't want to get stopped out prematurely, potentially before like an actual aggressive move up. So we just leave it open, right? And then I'll just fast forward a little bit more, right? You're seeing another push into this fair value gap, so another partial taken. And then as prices continues, boom, right? You're seeing, right? Price did in fact tap it. So think about it, you enter the trade at 9:42, and then by 10 o'clock or 10:01 you've basically closed off 90% of your position. So this was in the matter of just under 20 minutes, you were able to close off 90% of your position at a, you know, with this being at like 3.79 risk to reward. So at the very least, you've probably closed off two and a half, almost maybe three risk to reward on this entire trade. Right? Probably close to two and a half risk to reward, right? On this one move right here in 20 minutes. So then, we just let price continue playing out, and then boom, another push into the fair value gap. So at this point, you close off 90 to 95% of your position. And then, here for me, I ended up rolling my stop loss pretty much at like 11 towards the end of the session. But at this point, look, price pretty much cleared 90% of the move. So if you want to roll your stop loss, then that's fine, right? It doesn't really matter at that point. You caught most of the move. So then at this point, right, we're letting price go. And then you can see price came really close. And so you have several options. When price gets really close to your target but doesn't hit it, you can either roll your stop loss into a stop profit and put your stop loss under a low, like maybe right here, or under the candle, because then if you roll your stop loss into a stop profit, now price either has to go up here or down here. And either way, you're still going to walk away with significant amount of profit, right? The other option is to keep your stop loss at break even, which is what I did. Or, if you see price get close here, you could just close early, right? Like you don't have to just wait for price to hit this level. You can just be content with where it's at and just close, right? So those are your few options. But for me, I left price at break even. And as you can see, I'm pretty much was in consolidation because price came up close again, decided not to go after it. Then as you can see, price continues pushing, pushing, pushing. Now, long story short, I'm gonna speed it up to 5-minute time frame, right? So here we're on the 5-minute time frame, right? Price gets close yet again, but does not tap it. And remember, my stop loss is already at break even because the session's over, right? So price is just hovering, gets close two more times, still doesn't touch it, right? And then it starts reversing. So then at this point, right, this is when the day ends, right? So the day has ended and price never hit my final target. However, if I extend this out, right, price does not, in fact, tap me, right? You see, there's a gap between the low of price and my entry because I had a limit order. So price does not wick me out. I'm still in the position, pretty much like I guess holding it over the weekend. This happened on Friday, so you're just holding over the weekend. And then as you can see, right, if I go into the speed up a little bit on the 15-minute time frame, you're seeing going into today's trading day of Monday, price never took me out. And as you can see, price does in fact eventually hit the final target. So the small little runner I had, I think I had like a 5% runner of the entire position. It does in fact get taken out, or my final target does in fact get hit, right? With this move right here. This is 7:30 a.m. on Monday. So this trade happened, of course, Friday morning, and then final target hit Monday morning. So basically, this was a position that was held over the weekend. So as you can see, like this is what happens when you are able to determine higher time frame buys correctly. You are now trading in alignment with the market, and that's why moves like this are able to happen because we correctly determine that price is going to be bullish. And so because we bought at the low of the session, right, we bought at the very lowest point of the move, and then we were able to catch this entire move up until it ultimately hit our final target. So many traders struggle with trading because they don't factor in higher time frame buys. They go into a trading session without a bias, and so they're pretty much at the mercy of whichever direction price wants to go, and that's not the most effective way to trade. The most effective way to trade is to figure out which direction price is most likely to go, because when we're trading, we are always going to be at the mercy of the market. The market is going to decide where it wants to go. So as a trader, if you want to be successful, you need to fall in line with the market, and you do that by determining higher time frame bias. So now what I'll show you is that I'll show you the executions, right? Because there might be some people that will think that, it's just hindsight. It's easy to just say what happened and, do all this. However, the thing with me is that I actually took the trade, right? So if you can see here, right, I'll actually go into the 1 minute time frame. You're seeing all these arrows. These are, in fact, right, if you see, it's not that I put an icon of an arrow. If I click it, you see it says buy, you see it says sell, right? So these are the actual executions, right? If I go to the 1 minute time frame, you'll see that this all happened in real time. So if I go to the trade right here, right, you see that price broke structure, and this candle right here, this was the first bearish candle that tapped into the fair value gap. You see, this is when I bought, because it's a blue candle, of course. Then you're seeing where I took partial. So I took partials right here, right on this candle, because this is the level right here. Then I took partials at this level because this is the fair value gap right here. Then partials at this candle, this bearish candle, because this is the candle that cleared the high. And then, I eventually took partials with this bullish candle, right? Like these couple candles here, because these were the candles that cleared this fair value gap and cleared this major high. And then another partial at this candle, because this was the one that tapped into fair value gap. And then finally, if we kind of fast forward a little bit right to the next day, you see the final target was hit at this high, right? So those were basically the executions to show you guys that this is in fact what took place. And this was, I would consider to be a mega trade, because the trade, as soon as we entered, pretty much we were in drawdown for like 3 minutes, 4 minutes, and then price, like, look at it, price literally, like, if I take off the drawings and remove the executions, look at this, right? As soon as we entered, look at the, oh, okay, well, we can't take off the drawing, but okay, we'll just get rid of this so you guys can see easier, right? As soon as we enter the trade right here, right, look at this move, right? As soon as we enter, price just exploded in our direction, exploded in our favor, right? And like, this is a normal occurrence when you are trading in alignment with the market, in alignment with market logic. This is what ends up happening in many cases, right? You'll trade and then the market will explode in your favor and you'll just explode in profit. And we traded at the very bottom of this move before the explosion up, right? There's not many other traders who are able to catch a move for a buy at the lowest point and being able to ride price pretty much like for its entirety, right? But we're able to do that because we're trading with sound logic. We're trading on the right side of the market. Now, the interesting part about this day, if I remove the full screen, right, was that the same opportunity presented itself on the NAS 100. So if we quickly, activate replay mode really fast, right? I mean, you see that NAS 100 eventually also made the low and then ultimately went to the high. And this was the final target if we were to take the trade. However, interesting part is that NAS also delivered us a setup, because if we jump in on the 1 minute time frame, right, what happened here, right? Price eventually came down. This bullish candle here is 930 open. What happens? Price eventually came down. It left equal highs. Price came down, and then what happened? Eventually, after price made this low, we started seeing some bullishness, and then what happened? Price broke structure at this level with this candle, and then what did price leave? Right? It left. It might be a little hard to see, but it left a fair value gap. And I'll also full screen this so we can like focus on it. Price left a fair value gap right there. And then what did price do? With this bearish candle, it tapped right into the fair value gap. So even if you were trading the NAS, clear as day, price came down, it reversed, it left a fair value gap, and price tapped it, which would have been your entry. And of course, it broke structure, so you had all the confirmation that you need. So at this point, if you traded NAS, this would have been your entry. Stop loss below the low. And funny enough, you only would have been in probably a few seconds of drawdown before price just completely expanded. And then same idea, you would have had the same, very similar partial targets. You would have had, this would have been my first target right here, which if you think about it, a 1 to 2.82 risk reward as your first target. Like, for most people, that's a full trade right there. So if you wanted to, you could have closed out your entire position right there. But once again, I entered on the S&P because that gave us the setup first, and there was no guarantee that the NAS would give us a setup. But this right here was almost a 1 to 3. So you could have taken off, in my opinion, I probably would have closed off at least 50% of the move because of the risk reward, right? Then you could take another small partial right here if you want to do another partial right here because of these levels, which look like almost equal highs. And then right here, right, this was what we deem to be the main target because this makes the London highs, right? And at that point, this is a 1 to 1.47 risk reward. So this is almost a 1 to 5. You should at least, at the very least, close 80%, if not 90% of your position, right? Another fair value gap target here, and then the final target at this level for literally a 1 to almost 7.5 risk reward. And then what happens with price? Price goes up, taps it a few times, and then decides to like repel, right? So once again, these things do not happen by accident. This is the game that price is playing. Price is going after liquidity, is taking out previous lows, previous highs, is going to rebalance itself, going into fair value gaps. This is the game that's being played. And unless you decide to learn this, this is going to continue happening over and over and over. This is never going to stop. Price is controlled by an algorithm. It is a machine that moves price. Price, every single point of movement, it is all predetermined. It is all controlled by a machine, right? Nothing happens by accident. You're effectively watching a play unfold, and it's repeating. And it's only once you are able to piece together and figure out the repetition that you can truly succeed, and you can succeed like this. Because once again, like you're seeing this trade right here. I showed you the entry. The entry is the same, right? You enter at a fair value gap after liquidity is taken, and you go target the targets on the opposite direction, right? Price went down when we're bullish. We bought because we're bullish, and then we took price higher because we're bullish, and we're closing out at the same logical targets, previous highs and previous fair value gaps. And this trade right here went for a maximum of a 1 to 7.5 risk reward. So let me ask you this. If you were to take a loss in this market, would you be worried or concerned? Right? Like human nature, of course, no one wants to lose. No one wants to be in drawdown. No one wants to be wrong. I understand that. But knowing that when you have this logic and this power, this information, knowing that this trade is, for the most part, one could argue almost a normal occurrence when you have the right logic and the right information behind your trading strategy, right? Would you be concerned if you were to take a loss? No, because you're still trading. Like these setups are high probability setups. So you're going to have a high win rate applying the strategy. So you're going to have a high win rate, and then clearly you are going to win massively when you do take these trades and win, right? And so your losses are going to be negligible. This one trade right here will easily erase all your losses for the month, right? And you will still walk away in profit from this one day alone. So this is why I take my time with trading. This is why I'm patient when it comes to trading. This is why I don't chase trades, because if price decided to not give an entry and just take off, I'm not going to chase it, because I understand that setups like this, well, sorry, setups like this and opportunities like this happen all the time. Almost every day there's opportunities to take trades. Every week this phenomenon is happening, is repeating, so that means it's going to continue repeating, because this is the behavior of the market. This is how the market actually is. So I show you guys this because I care, because I want you to learn this so that you can be trading on your own, and so you can see this the way I see this, because I'm positive that so many traders entered this trading day with a bearish bias because they were not paying attention to the higher time frame of the structure break with the NAS 100. NAS 100 broke bullish before the session, but most traders probably didn't notice that, and so they probably approached the day being bearish when price was bullish. And for you to have gotten the bias correct, you could have taken a trade like this, and this would have been such a massive winner. For some people, this trade alone is good enough for the month, right? And this was on a Friday, right? So you would have been going into your weekend excited and happy. And at least with the NAS, you would have entered around 9:50, and then by 1 p or yeah, by like 1 p.m. you would have been done. So it would have been what, like a 3-hour trade, but you would have been in drawdown for just a few seconds, and then the rest would have just been profit, right? So that wraps up the video. Enjoy the video. Do leave a like and subscribe as we're on the road. Tell me to subscribe, guys. So once again, it's Joel, and I'm out. I'll see you guys for the next video.